Hey, what's going on everyone? Welcome to the Nomad Hedge. And so in today's video, we're going to take a look at what happened in the financial markets this past week. And I know it's been a very tough and rough week here in the markets. We saw a big sell-off here after the CPI report and the FOMC meeting. So we've been down now for almost 4 days in a row. And in this video, what I want to do is provide you with some scenarios here, indications that we could possibly see another leg up here in the markets. I know that might sound a little bit crazy or whatever, but stick with me here. I'm going to show you exactly what I mean. We're going to take a look at some indicators. Eventually, what the markets always do, they build patterns, and for now we don't have any patterns going on. We can see some trends and see sort of like where things are going, and so I'm going to show you exactly what I mean in this video. So if we take a look at what's coming up for next week, we're actually not going to see anything in the markets, like any economic data, any announcement whatsoever, until Friday next week. So it's going to be pretty quiet from Monday till Thursday, and then on Friday we're going to get a slew of economic reports. So that's what I think we could see another leg up in the markets here, and there's some key levels that we're going to watch and see how far this leg up could eventually go. But first, if you're new to this channel, consider subscribing and hit that like button. And so let's get into the action and to the video. So let's get into it. So let's begin by taking a look at the put-call ratios. And we can see here that the amount of puts have actually been rising steadily here in the past couple of days. And we can see now the put-call ratio stands at around 1.147. And whenever we see the put-call ratio reaching levels of 1.15 and above, that's when we can see some positive reversals in the major indices. So that's why I keep an eye on the put-call ratio for now. Any spike towards the upside could give us some, tradable rallies towards the upside when everyone is so bearish at this point. So let's move on here to the 10-year treasury yields and take a look at the 10-year. And as we can see here on the 10-year, we have reached a level of strong support and resistance zone here. So if we zoom in a little bit, we can see that we've been trying to get above this lower high trend line here. I mean, we can zoom in a little bit further, look at this on a 15-minute chart. Now, as you can see, whenever this thing goes above this lower high trend line, it rejects it here, and now it just rejected it again. So we'll see if this one's going to continue. It's struggled to get above it, because I mentioned in a previous video that we could possibly see another leg up in the treasury yields. But for now, we do have a reversal candle here. This is a pretty bearish candle. So if we get another leg down here on the 10-year yields, obviously that's going to support equities towards the upside. And if we take a look at the 2-year, similar action could be said here as well, as we've been reaching sort of like kind of same level of high resistance and support areas, and after breaking down from this head and shoulders pattern. Although this head and shoulders pattern has not been fully validated yet, because we need to obviously move down lower, it's a struggle between the bulls and the bears here. So we'll see if this thing is just going to hover sideways here, or if we're getting a complete breakdown. Now, if the 10-year breaks down, the 2-year is obviously going to follow, so we need to keep an eye on that. But obviously, the more these things go towards the downside, the more that's going to be supportive for US equities. But there's some interesting things happening on the VIX. Here we can see that the VIX broke above this lower high trend line here, and then we found support yet again here on this higher low trend line. But what's been interesting about the VIX specifically is that you can see these days when we closed up higher and then we gapped up all of a sudden. These were days when the S&P actually went up higher. Normally we see the VIX goes down, equities tends to rally, and vice versa. But we're seeing some abnormal action here on the VIX. But for now we closed down lower, and one thing I noticed here on an intraday chart is that we could possibly have reached a double top here on the VIX, and we could see some similar action here on the VIX as well. But obviously, even if we get some days up here, during intraday session on the VIX, the bias is still towards the downside. The more the VIX goes down, the more that's obviously also going to be supported for equities. So for now, the bias is towards the downside for the VIX. And lastly, let's also take a look at the dollar index. Now, I mentioned this before, we do have a bull flag being played out here. The same thing here compared to, or just like the 10-year, we have reached a level of support and resistance zone here going back in time. For the dollar index to actually move up higher here, we need to get above this level. If not, we are most likely going to see the dollar possibly move down lower here. And one area of strong interest is going to be this Fibonacci retracement level 0.618. So if we're getting a couple down days here for the dollar index, again, that's also going to support US US equities towards the upside. But then again, we can't ignore the fact that we do have a potential bull flag being played out here, so we could possibly see another leg up here in the dollar index once we're reaching these critical levels here on the Fib scale. So for now, I'm just treating this as possibly just a couple of days of tradable rally for the major indices. Okay, so let's begin by taking a look at the S&P 500 or the ticker symbol SPY. And as we can see here, we've been down for almost 4 days in a row. And so what we're trying to do now is look for patterns. We don't have any patterns being played out yet, but we can look for a possible trend line here. Now, typically a trend line does not confirm when we have 3 candlesticks connecting it, but for now we just have to take it for what it is. And so when we drop below this high-low trend line here, we do have 2 open gaps that we left open. And if we take a look at this area here where we found buyers, this coincides with a 0.5 here retracements on the Fibonacci scale. So this could potentially tell me that we could have found some short-term support here, giving the possibility that we could see another couple of days rise here, possibly hitting resistance here at the Fib 0.236 and maybe closing this open gap. So indicator-wise, we're still below neutral here on the RSI. Yes, we do have a sell signal here on the MACD, but we're still above that neutral level, and the ADX has not flashed a sell signal yet. So it's going to be interesting what we're going to see on Monday at the open and see how the market's going to react in the couple days ahead, because I mentioned earlier, like from Monday to Thursday we don't have anything. I mean, the market's going to be pretty much quiet. We're not going to have any economic reports, not major company reportings whatsoever. Yes, we're going to have a few companies reporting, but that's not going to make market mover. So for now, what we're also looking at, if we apply some moving averages, the bulls are going to do everything they can to get above this 50-day moving average. And so that could be a technical level to watch as well. So if we get above that thing, that's going to get us some support here towards the upside, because eventually what we're looking for, as I mentioned earlier, we're looking for patterns here, right? So we possibly want to look for a falling wedge being played out here, finding resistance at this level, and then we have to look towards this Fib scale of 0.618. This could be a strong critical support area, and we definitely do not want to break this. So if we're going to get a Santa Claus rally, it's most likely going to be here. So let's also take a look at the Dow Jones Industrial Average. Now, the Dow Jones also broke below this high-low trend line here, but take a look at this. I mean, we found critical support here above this lower high trend line, just at the 50-day moving average, and we're still above that 200-day moving average, right? Now, the indicators, I know everything is pointing to sell here, everything is so bearish, but one good news is that we are fairly neutral here, below neutral here on the RSI. So, I mean, this is an indecision candlestick here, right? So this is a little doji. I mean, we had buyers as much as sellers during the trading session, and I mean, this was just such a clean touch of this 50-day and this lower high trend line here. So that is why when I look at the SPY, when I look at all the other factors playing in right now, I just can't see things not rallying in the beginning of next week. Let's move on now and also take a look at the NASDAQ or the NASDAQ 100 QQQ. Okay, so this is the NASDAQ 100 or QQQ. So we found support here just above this open gap. Now this open gap also coincides with this level here, but this is a strong area of support in my opinion, because we just gapped above this level because we closed below it the day after this indecision candlestick, and then boom, we rallied above it. So this is an area of strong support. Now to add some flavor to this, let's apply the Fibonacci scale here and see where it found support as well. And where did we find support? Right at the Fib 0.618. Okay, so it's pretty near, I know, but it's in the middle of this level here. So either we could see during the trading session that we could touch this thing and then move up higher here as well. So again, I'm just looking at some key levels here, and everything seems to be lining up so far. The SPY, the Dow Jones, and now critical support here on the QQQ. But there's just one last thing that I want to show you, and let's move on to the Russell 2000, because there's some interesting technical elements that we have to look at the Russell 2000 as well. Right, so we do have the Russell 2000 here, and as we can see here, clean support here, right at this 0.618. Now these levels are important. I always pay attention to these. They're not only defined support levels, but also resistance levels as well. And so if we take a look at this thing on an intraday chart, we can see the buyers just stepped in here late in the session at this clean 0.618 level here, and we didn't even make any new lows. I mean, if this is all not a coincidence, that I think it's going to turn out to be, but I'm just saying, I mean, there are a lot of technical patterns patterns here. We're looking at some, indicators and how the dollar is faring, the treasury yields and everything. This would just support a tradable rally at least until Thursday next week. So it's going to be interesting to see. I'm obviously going to follow up on what's going to happen here on Monday and Tuesday. And so it's going to be interesting to see how the market's going to fare up when everyone is so bearish at this point. Right. So lastly, let's also take a look at Ethereum here. Now, what's interesting about Ethereum, in my opinion, is that it works like the futures market, but better. So if you want to get a hint of what the market is going to do, look at what Ethereum is doing. Now, I'm not a pro or trying to make you buy Ethereum whatsoever, but I'm just technically speaking. I'm recording this on Sunday here, and we can see here on Friday we had 8% down here, almost 8%. We fell below this critical 0.618, but look what the bulls did during Saturday, and now on Sunday we're above this 0.618 level. So if we're finding critical support here during the weekend for Ethereum, I mean, that even also builds up the case for a tradable rally next week, right? So I'm just saying I'm going to follow up at what's going to happen next week. Friday is going to be the key day, in my opinion. We're going to get the core year over year and the core month on month as well. And so that's going to be the only day, in my opinion, that's going to make the market move. If we're getting some really good numbers, who knows? Maybe we can get a strong center rally for, for the days of December 25th till January 2nd. So that was it for today's video. Thank you so much for watching if you made it thus far. And I'll see you guys next week. It's going to be interesting. And take care for now and have a great weekend. Goodbye.